Generally, all life insurance policy provides life cover for single pay. Some annuity plan offer joint life cover. Unit linked insurance plan ULIP offer life cover for the policyholder at the same time invest in market linked returns. Today in this video we'll see will HDFC Life Classic Plan provide comprehensive coverage to your family? A detailed analysis on this will help you get the answers. Hi and welcome to holisticinvestment.in YouTube channel. We help individual investors like you to take right financial and investment decision. HDFC Classic One plan is unit-linked non-participating life insurance plan. Today in this video, let's look into its features, benefits and also see its IRR analysis by which we will come to know the potential return from this plan and also compare it with pure term insurance along with NSC or ELSS by which we will come to know whether this plan would be beneficial for us to achieve our financial goals. Let's first look into the features of this HDFC Classic One plan. Option to choose between single life and joint life. The relation between the two policyholders can be any like spouse, child, etc. It is a single premium policy, a life insurance plan with the opportunity to earn market linked returns. Under the joint life variant, the death benefit would be payable only after both life assured to die. On the first death, the surviving life assured has an option to withdraw the entire fund including the top-up fund value and continue with the full life cover for the rest of the policy term. Loyalty additions will be allocated as extra units at the end of the 10th policy year to boost your fund value provided no partial withdrawals have been exercised. Flexibility to invest in 11 funds. Maturity benefit can be received in installments. Now let's see the benefits under the HDFC Classic One plan. The first one is maturity benefit, the second one is death benefit, the third one is loyalty additions and the fourth one is partial withdrawal. Now if you see at maturity benefit, if a policyholder has opted for single life coverage variant, then on survival unit maturity the fund value will be paid. If the policyholder has opted for joint life coverage variant on survival until maturity of at least one of the life assured, the fund value will be paid. The second one is death benefit. Under single life coverage variant, sum assured on death is payable as a lump sum on the death of the life assured during the policy term. Under joint life coverage variant, sum assured on death is payable as a lump sum on the second death of the two lives assured during the policy term. In case of death of one of the lives, the surviving life assured will have an option to either fully withdraw this amount and continue the policy with the coverage as per the policy provisions or not withdraw any amount and continue the policy with the coverage as per the policy provisions. Sum assured on death is a highest of total sum assured less partial withdrawals made if any, total fund value or 105% of the total premium paid including top-up premiums if any. Third one is loyalty additions. Loyalty additions will be allocated as extra units at the end of 10th policy year. Loyalty additions will be higher of total premium allocation charge and policy administration charge deducted from your policy to date and 5% of the single premium. The last benefit is partial withdrawal. Partial withdrawal is not allowed in the first 5 policy years. There are 11 fund options in this plan with each having different risk profiles. Since HDFC Classic One plan is a ULIP plan, there are some charges associated with this policy. The first one is premium allocation charge. This charge shall be levied at the time of the receipt of the premium as a percentage of the premium. For single premium it's 2% and for top-up premium it's 1%. The second one is policy administration charge, 0.04% per month of the single premium subject to a cap of Rs 500 per month. Third one is fund management charge, 0.80% per annum of the fund value for secured managed fund and for bond plus fund and 1.35% per annum of the fund value for other funds. For the discontinued policy fund, that is FMC, 0.50% per annum is applicable. Fourth one is mortality charge. This depends upon the variant and also the age of the life assured. The fifth one is partial withdrawal charge. There is no partial withdrawal charge in this policy. The sixth one is switching charge. There is no switching charge in this policy. The seventh one is discontinuous charge. This charge depends upon the year of discontinuance and also your premium amount. From my perspective, even though this is a single premium policy where there is limited charges, I feel some charges are irrational. Suppose if you take for an example premium allocation charge, policy administration charge, this could possibly pull down your overall potential of a good return. So it is always better for us as investors to know the policy in depth before choosing it as an investment vehicle. Let's see the advantages of the HDFC Classic One plan. It's a hassle-free investment as it is a single premium policy. Top-up premium is also allowed after a lock-in period of 5 years. Partial withdrawals are allowed post lock-in period of 5 years. If unlimited free switches are allowed during the settlement period and policy term. Rider options enhance the life cover. Tax benefit as per Section 80C and Section 1010D. Now let's see the potential disadvantages of HDFC Classic One plan. The lock-in period is for 5 years. So for 5 years, if you have a short-term financial goal or for any other emergency purposes also, this fund will not be that beneficial. If you see, the policy loans are not available in this product. So if you see in other investment vehicles which are already there in the market, there are policy loans available, whereas in this HDFC Classic One plan there's no policy loan which might assist the policy holder. The return for the policy administration charge and the premium allocation charge in the name of loyalty additions, but the fact is this does not add any real value to it. If you see, as an investor, we need to see investments on what role will it play in our investment portfolio. If certain investments are not that beneficial to our investment portfolio, then we have to think twice whether to invest in it or not. We as investors will have long-term financial goals to achieve. For that, we need to choose an investment vehicle. And for choosing an investment vehicle, we need to see its IRR analysis, by which we come to know the potential return of that investment vehicle and also what role will it play in our investment portfolio. Now let's first see the HDFC Classic One plan IRR analysis. Now for this IRR analysis, let us make certain assumptions. So comparing it would be easier. There is an investor for whose age is 30 years, his sum assured is 1 crore, policy term is 10 years, single premium is for 10 lakhs. If you see, this benefit illustration is taken from HDFC website, and the return of 4% and the return of 8% are not guaranteed, they are just assumptions. And return of 4% is in the worst case scenario, its IRR seems to be 1.02%, and that the return of 8% per annum, which is the best case scenario, its IRR seems to be 5.03%. In both case scenarios, you see this interest rate is even less than even bank FD rate, and there are certain investment vehicles which can produce even greater return than this. So as an investor, it is always necessary for us to look at all the investment vehicles in the market and also choose the right investment vehicle catering to our financial goals. If you see, this is less than even bank FD rate. So as an investor, we need to see the alternatives by which we can attain our financial goals and also give our family the required financial protection. Now let's compare this HDFC Classic One plan with a pure term insurance along with NSC or ELSS. By that we would come to know whether this plan would be beneficial for us as investors to our investment portfolio and also help us give the required financial protection to our family. Let us make certain assumptions, by that comparing would be easier. Now for assumptions also, let us have a similar cash flow so that it will be easy for us to compare. Here the sum assured is for rupees 1 crore, policy term is for 10 years, single premium is 59,000, balance amount can be invested in NSC or ELSS as per policyholder's choice, catering to his risk appetite and financial goals. That can be 9,41,000. You see, a pure term insurance along with NSC can also generate an IRR of 6.14%, whereas a pure term insurance along with ELSS can generate an IRR of 10.58%. If you see, NSC is fixed income investment scheme, even that can generate better return when compared to HDFC Classic One plan. So as investors, before choosing your investment vehicle, you should also look at its potential return. By that you would come to know whether this plan would be ideal suit for you or not. And if you are an investor who look to take risk, then you can opt for pure term insurance along with ELSS, which can generate an IRR of 10.58%, which is inflation beating return, and also will help you achieve your financial goals and also give your family the required protection they need. Now let's see the final verdict on this HDFC Classic One plan. It offers good life cover when compared to other traditional policies that are available in the market. The reason for the low yield is the charges in the ULIP. This makes it unattractive among the other investment instruments. HDFC Classic is a hassle-free investment, but the potential return is not beneficial for an investor. There are better lump sum investments that help you combat inflation in the long run. So, to choose an investment vehicle that caters to your financial goals and your risk appetite, you need to consult with a financial advisor. By that, you would come to know the investment vehicle that you need to invest in, which helps you achieve your financial goals and also give the required financial protection to your family. Detailed review on HDFC Classic One plan is available in our website in the form of a blog post, the link to which is given in the description below. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.